Juan Carlos Artigas, gold is going through what you see as a perfect storm. And one of the indicators of that so-called perfect storm was a weak Japanese government bond auction earlier this month. Why was that an indicator for you?
I feel investors are starting to question how effective the unprecedented monetary policies that central banks are implementing around the world will be. So, because they are questioning this, we see this as an indication that the market is perhaps getting a little bit tired of the circumstances and looking at other assets to balance the additional risk that portfolios have.
And another indicator that gold is in the middle of a perfect storm, I think it's up over 25% so far this year, is the fact that you're seeing negative yields in places like Germany and Japan. Can you talk about this force?
Absolutely, and it's related. In some sense, it's all about the unconventional monetary policies that we have seen for quite a bit some time. And the fact that there are negative interest rates, in particular for gold, it creates three things. Number one, it reduces the opportunity cost of investing in gold. I mean, literally putting your money in certain sovereign bonds gives you negative returns, right? So that's difficult to solve. The second thing is that it reduces the pool of assets that investors can access, right? Because, again, not everybody is going to be willing to purchase bonds that are trading at negative yields. But at the same time, it is also pushing investors to increase their holdings of lower quality bonds and also increasing their stock exposure, therefore creating more risk in their portfolios. So gold allows to balance that risk. And so that's the byproduct of these policies.
So in other words, it's acting as a volatility hedge. Now the VIX has been fairly low of late, but a lot of people are worried that it's going to spike as it did back in January. Can you talk about gold as a volatility hedge?
Yeah, so gold is a systemic risk hedge or an uncertainty hedge. And even if volatility levels in stocks may not be as high right now, the reality is that when you look at the uncertainty levels around the world, whether it is by geopolitical risks, whether it is by unprecedented or unexpected outcomes in the British referendum, many other cues around the world in emerging markets, people are nervous that something could potentially pull back in financial markets. And again, that uncertainty helps high-quality liquid assets such as gold.
And perhaps it's self-reinforcing, but gold ETFs are seeing a whole lot of inflows and funds follow performance, and that turns into a virtuous circle, if you will, for gold.
Yes, so there's ETFs have seen record inflows so far this year. And one of the ways to explain that, as you were saying, is both supporting the price, but also being supported by the price. What is important to say, though, is that we believe that a good portion of this is pent-up demand from strategic investors that have been waiting for this perfect storm or for the conditions to get back into the market. So while some flows may be more tactical or momentum-driven, we do think that a good portion are coming from investors who believe in gold over the long run.
All right, you just mentioned demand. I'm going to bring up supply, because as the price rises, are we going to see more mines come online, more gold hit the market, which could put a cap on gold's rise?
Well, mine supply actually for a while started to rise, and in recent quarters plateaued somewhat. Some analysts believe that it will plateau or has plateaued. However, when you look at the long term, the reality is that supply for gold is fairly stable. Whether you go back to the 2000 or in 2008, there was a little bit of a pullback in the supply, then go up. But overall, mine production as it is, it's fairly stable. What happens, though, is that for gold, not only mine production is bringing supply, it's also recycled gold.
All right, and then finally, right now, gold's at about $13.50 an ounce. What's your outlook for the rest of the year?
Even though we don't forecast the price of gold, what I can tell you, though, is that the conditions continue to be very supportive of gold. As we said before, negative interest rates, from our perspective, have created already a structural shift. So even if we haven't seen everything yet, we think that it's going to reverberate for quite some time. And overall uncertainty is important, but also the fact that long-term, emerging market growth and more money into middle classes pockets in emerging markets will support gold over the really long time.
All right, well, thanks a lot, Juan Carlos.
Thanks, Greg, for having me.
And thank you for watching The Street.